Back to homes today. This is very proudly presented here by Audrey June Forche, who is a RE/MAX real estate agent. Audrey is also a well-known advisor. On Women's Worldview, she features the most up-to-date information pertaining to buying and selling your homes and all the other loopholes that are attached to it. Let's meet her brilliant guest for today and follow their conversation.
Welcome, friends, to Homes Today. My name is Audrey Forche, and I'm a RE/MAX agent in Montgomery County, Maryland. And today we have the ever-famous CPA Manjeet Singh with us to talk about all of the new tax laws that have come into effect this year in 2018. So welcome. Thank you for coming on my show today. I really appreciate it.
Thank you very much for inviting me. It's an honor.
Thank you. So what would you say is the most important thing, or a couple of the really important things that you want our viewers to know about with these new tax laws?
The new tax laws was signed on December 22nd, 2017, and it is supposed to simplify a lot of tax for the general American public.
Right.
A lot of things are there which is beneficial, and we shall get into it. The standard deductions, for example, have been doubled.
Okay.
And there are some pros and some cons to that. Personal exemptions have been deleted or have been taken out, and therefore the gap between the personal exemptions and the standard deduction is slightly higher for certain group of people, but slightly less for the other group of people.
Okay, so that would be the things that you deduct from your taxes. Let me ask you this. So that would be mostly like a W-2 employee that would have benefit from these deductions, or are they general? For example, I'm self-employed, and so I get a 1099, and I use myself as an example sometimes just to see the difference in certain situations. So if I have a W-2 versus a 1099, who is it more beneficial to this tax deduction?
The itemized deductions or the standard deduction does not affect that area of the tax return.
Okay.
Either you are on a W-2 or on the self-employed as a Schedule C,
right,
or through some business entity.
Okay.
All right. The itemized deduction is on the second page of the tax return, where you are usually claiming your mortgage interest, real estate taxes.
Okay.
In Virginia, car tax, which you are in Maryland, you don't have the
right,
car tax, charity, and certain miscellaneous items for work-related, W-2 related. However, that is only available for the year 2017, and in 2018, miscellaneous itemized deduction will also be eliminated.
So if I do my Schedule C and I have a lot of business expenses, I have an employee, I pay all of her, FICA with all her withholdings and all that sort of stuff. I pay for my office and running a business. Will I still do a Schedule C and itemize my deductions? Because I feel like my deductions would probably be more than what the standard deduction is. Is that what I want to do?
Yes.
Okay.
On your Schedule C, you will be taking all your ordinary and necessary business expenses under Section 162, and you will be reducing your income subject to the Social Security and Medicare taxes.
Right.
Thereafter is when you go and claim your mortgage interest items, or the personal exemptions, and therefore your Schedule C is unchanged as yet.
Okay.
Except for a minor item.
Which is?
No more meals and entertainment deduction, which was only 50% anyways.
Yeah, that wasn't that big of a deal.
So that goes away. No martini lunches for me.
Oh, I'm so sorry. Well, so the standard deductions, if you're a regular W-2 employee, that's probably going to benefit you more so than in the past tax years.
Yes.
Is that correct?
It's going to definitely benefit individuals who do not have homes for mortgage interest
Okay.
primarily.
Okay.
It's going to be in their advantage.
Okay, very good. And is there a difference if if you're a married couple or a single filer, if you file separately or if you file jointly? Is there, is it for each person and then you get a double deduction? How does that work?
For single individuals, the current standard deduction is going to be for the year 2018 specifically is going to be $12,000. For married couples, it's going to be $24,000
Okay. All right. So,
as a standard deduction.
oh, that's very good. So that sounds like that's more than what it was in the past,
It was.
as far as I know.
Yes.
So if we are going through our taxes, and if you are an individual, maybe you have a company or you have a side business. I hear all these people have this thing called a side hustle now, where they have their regular job and they work, and then they have like a little side business to make some extra money. That is a business for them. Would they be the kind of folks that would like to consider maybe doing like an LLC or something, and that I've heard is called a pass-through income? Can you maybe talk to us about that a little bit?
Absolutely. An LLC is the most flexible kind of business entity that you can incorporate to do your business.
Okay.
As you use the term side hustle.
Yes.
Okay. LLC can be, if it's a one-member LLC, it's called as a disregarded entity. So from state charter perspective, whether it's Maryland, DC, or Virginia, you are a separate business entity. However, from income tax perspective, the IRS perspective, it is disregarded, means you are treated as a sole proprietor.
Okay.
So you do the regular Schedule C.
Okay.
But you can be, if you are two people, husband and wife, a brother and sister, or any combination of people, then you will be treated as a partnership.
Okay.
The income of a partnership is passed through, in the sense the partnership does not pay income taxes. We prepared the 1065 form as an informational package,
Okay.
and then we split the profit to the various members of the LLC or the partners.
Okay.
So bluntly said. And if you and I are partners, you are 60%, I'm 40%, whatever is the income, I'll pay tax on the 40% of the profit.
Okay.
And that is passed through to me. You'll pay tax on the 60%, that's passed through to you.
Okay, and that's going to come to my personal income taxes, is that correct?
Yes.
That the actual LLC's not paying
That is correct.
the taxes. Okay.
Okay.
So, is that pretty much it for the LLC? What else can we tell?
What else? There is a very good idea in there.
Okay.
Since the corporate income tax rates, the regular C corporation tax rates were reduced from maximum of 35% to a flat 21%, whether you made $100,000 or you made $10 per se.
Okay.
It's reduced. So in order to bring parity to these pass-through entities, what the Congress and the Senate, they agreed upon is a 20% deduction to these pass-through entities, except for a certain class of businesses. The 20% for people who are single, the threshold is $157,500.
So I can't make more than that.
If you are making more than that, that 20% deduction is reduced proratably.
Okay.
And the top ceiling is $415,000 for married filing joint, and half of that is $207,500. So between $157,500
Okay.
to $207,500, you get the complete 20% deduction if you are below $157,500, and if you are going over and above, close to the 207, your 20% deduction is reduced proratably.
So am I paying more taxes as I make more money, or am I paying less taxes?
You are paying less taxes. Let's say if your income is $100,000,
Yes,
which is below $157,000,
of course.
then you have a 20% deduction, which
Okay.
means you're going to be paying tax only on the 80,000, 100,000 minus
Right,
the 20%
of course.
deduction.
So then if I'm making 200,000, my deduction is? You have to figure it all out on the calculator.
On the calculator, and let's say
Sorry.
if you're single,
Yes.
it's over the 157,000.
Okay.
So you're gonna be restricted.
Okay.
But if you're married filing joint, you'll have the $40,000 deduction.
Okay.
20% of the full.
And is this on
200.
just a regular, it's doing an LLC lets you do this, is that correct?
LLC that is opted to be taxed as a partnership or
Okay.
as an S corporation.
Okay, so that's how you have to do that. Can someone that just has a regular W-2, can they make an LLC, or is it beneficial? Obviously, it sounds like it is to be an LLC, but if you're a husband and a wife and you have a W-2, each one of you, should you consider maybe doing an LLC?
Yes, you certainly may consider doing an LLC as a partnership, because what is an LLC? A limited liability company. You are involved in business and you want to protect your own personal assets. Therefore, you generate or you create this business entity to protect yourselves personally from the acts of error and omission
Right.
of your business activity.
Okay.
Okay, I'd like to add a little sentence here to what I just talked. Remember, we said 20% of the deduction, and we talked about the limitation of 157,500
Yes.
and for 207,500. It's not just from the business also. You have to also consider on the W-2 income that you have received from other sources as well. So the threshold limit is restricted from there as well.
So, but I don't have to have this, we call it the side hustle. We don't have to have the side business to do that. Let's just say I go to work from 9 to 5 every day, so does my husband, and we both get W-2s. Can we do a LLC? We should do an LLC. We
Yes.
don't have to have our own little personal business to do the LLC. Is that
Yes,
correct?
that is correct.
Okay.
Audrey, I'd like to take this opportunity to add a few sentences here also. The 20% deduction for the pass-through business entity that we are talking about, and that if it is an LLC, there is no wages from the business per se.
Okay.
Okay, but if it is coming from an S corporation,
Okay.
the S corporation is supposed to give wages to the shareholder.
Okay.
And they are going to have employees. They're going to be giving wages to the employees. So those wages numbers also comes into picture
Okay.
for the 20% deduction.
All right.
Okay, and at the same time, there's another formula there as well, and that is 25%. But you have to add back something about the 2.5% of another number.
Okay.
So it is not a very plain, simple thing.
Right.
It is slightly involved calculations to come up with that proper deduction
Okay.
to have the tax advantage from this. This morning itself, I read in the blogs and the news from the Bloomberg that there are going to be a lot of accountants, attorneys, who are going to be looking at and talking about other methods
All right.
that how they can take the maximum benefit of this so-called loophole. And but for example, an accountant, I fall in a specific category. Real estate agent
Yes.
falls in a specific category that because of our name we get the business.
Okay.
We are excluded from this 20% deduction.
Oh.
All right. So the trick there is going to be merging other business along with our businesses, or diversifying it, splitting it between different business entities to take advantage of this 20% deduction.
Okay. So, I mean, we know that each person is individual, so you have to look at everyone on a case by case and maybe suggest to somebody that has never even thought about doing an LLC or whatever that maybe this might be a benefit to them, I'm sure.
Right.
And I want to just talk about in general, if people have written things off you know, like on charities, what about charities? Can people still deduct charitable donations these days?
That's a very sad part. If you are not itemizing,
Yes.
because your standard deduction being $24,000,
Yes.
you're not going to get the benefit of the charity.
Okay.
All right.
All right.
So give out generously so that your real estate taxes,
Yes.
which is limited to $10,000,
Okay.
real estate taxes, car taxes, and the state tax, income tax withheld, or extra taxes that you have paid.
Okay.
They exceed the standard deduction, therefore you'll be itemizing,
Okay.
and therefore you'll have the benefit of claiming the charitable donations in cash or in kind.
Okay. So the new tax laws we know are complicated. So I guess I would say that most people thinking that they're just going to do their taxes on a TurboTax or themselves, maybe this is a time that they want to seek the counsel of a CPA, a professional, and take a look at their individual taxes to benefit from it. So again, I thank you for joining me. I really appreciate your information.
It's a pleasure. Thank you very much for inviting.
Thank you.